thank you everyone again for joining us. Good morning, good afternoon, depending on where you are in the part of the country. Really excited today for us to bring a new concept to our Pinnacle family and our friends here at the Your Family Bank, who's going to be presenting and telling you exactly how this is going to benefit you and your clients and all the great things that it can do for your clients and for yourself as an agent. What is the biggest hurdle for somebody's retirement? In a lot of cases, that's debt, right? We all have debt. It's a U.S. problem. And this concept is really there to help clients get out of that debt and be able to have a secure retirement and feel secure in what they're doing in retirement. So I know they're going to cover a lot of information and really go through some of the specifics. So without further ado, because they're going to do a lot better job than I can, I'm going to turn it over to Larry and Caleb from Your Family Bank to go ahead and take you through this exciting concept.
Thanks, Greg. Appreciate that, buddy. Thanks a lot. Thanks for the opportunity to present to your people. We appreciate that. We don't take that for granted. So, ladies and gentlemen, thank you so much for your time. That's one of the things we cannot give back, and we appreciate your time and effort to look at Your Family Bank. First of all, let me say that Your Family Bank is a program that works. We're in our 14th year now. I tell people we started with a Yugo. Today it is absolutely a Bentley. This is something that we do every single day. This is not, we're not a travel agency. We're a tour guide, if you will. We cases last week. I was in Vallejo, California last week, and we got 15 prospects. We do a lot with churches and in a program called Church Legacy Ministries. But it's all about helping people get out of debt. Again, my name is Larry McLean, founder of Your Family Bank, and my son EL. And I have Caleb here, and that's going to go over the software with you. But I did want to give you a little background on where Your Family Bank and Church Legacy Ministries came from. I'm a Florida State guy. We're a Florida State family, and you should feel sorry for me because we won all our games last year and didn't go to the national championship. So you should feel sorry for me on that side of the fence. But 14 years ago, I'm sitting in the stands on a Saturday afternoon, October. And at that particular time in my practice, we were doing annuities, fixed index annuities, and money under management with Charles Schwab. We still do both of those today, but that was our niche. And basically, we didn't do life insurance at all. And I thought if I could walk out on that field with 85,000 fans sitting in those stands, if I could walk out there and share with those people what I did, what kind of response would I get? And I could have went out there and said, well, ladies and gentlemen, we sell annuities, and I don't think we'd have got a great response. I could have went out and said, we do money under management with Charles Schwab. We do pretty good with that. Again, I don't think the response has been that great. So sitting at a Florida State game, went out, asked those, well, if I, say to them, well, I sell life insurance, which we actually didn't at that particular time in our practice. I don't think the response has been that great. But what if I could go out on that field and ask these two questions? Question number one, I'd like for you to answer these questions your own self if you don't mind. The question is, are you 100% sure you're going to have a great retirement, or do you have some doubt? And the second question is, what if we could show you how to get out of debt in 9 and 10 years, including your mortgage, spending any more money than you're spending right now? Would you do that if you could to improve your cash flow? Now, I can tell you I've asked that question thousands of times, and I pretty much always get the same answer. Yes, I've got some doubt about retirement, and yes, I'd love to get out of debt. 85% of America is in debt. So as far as prospecting go, there's a ton of prospects. So when I was doing just annuities and doing workshops and dinner annuity workshops and all that, I was just going to a special niche of people. These were people in the senior market, and the reason we were doing that because they had money to move, right? There's a whole segment of America that no one's talking to, and that's the people that are in debt. The only people that are talking to them is Dave Ramsey, and 90% of the people that do Dave Ramsey program basically fall off the program in regards to that. 80 to 85% of the people stay on our program, so we do know it works. But what we want to do is say, you know, what kind of prospects and how many people do you have out there to talk to? Well, when I started Your Family Bank, I made 100 presentations in 9 months. Remember, I said we started with the Yugo. I only wrote 30 cases out of the 100, so that closing ratio is not that great. I mean, 70 people said no, but only 30 people said yes. But something happened right here in my practice that changed, number one, my practice, and changed my life, because I got 14 referrals I never even asked for. That's a 46% referral ratio. So totally, I wrote 44 cases in my first 9 months, and we created out of that $705,000 of whole life premium. Now we'll talk more about that in just a minute, but we only use a specialized whole life policies to do it, because we're basing everything upon guarantees. So when I sit down with a client and we show them exactly what we do, it's guaranteed to work. If they do what we tell them to do, it's going to work. That $705,000 did not include any annuity sales, but I'll just give you, for instance, today we did a Your Family Bank program, and I moved over $495,000 of money over, and 80% of that's going into annuity, along with getting them out of debt. So it's going to bring in annuity sales and cross sales, money under management sales, if you do that type of work, because of helping people get out of debt. Because basically we're taking liabilities and turn them into assets. So 705,000, I did 1.4 million my first 12 months in that. And of course, today we do a heck of a lot more than that as we do, but that was our first year. Your Family Bank, what is it? It's a concept. It's a financial literacy program. It's based upon 7 steps. It's solutions on paying off debt, increasing cash flow, reducing taxes, and increasing retirement savings. Use a predictable plan with guarantees. I love being able to say to my clients, it's guaranteed, because we're based upon everything on guarantees. Our achievements, we've been the Agency of the Year 9 out of the 10 years. The top MGAs that use our company through Mutual Trust is one of the companies that we use. The top 5 MGAs, 4 out of the top 5 use Your Family Bank as their selling system and prospecting, getting people in the house, if you will. Through 2016 through 23, when we started keeping records, we've saved $562 million of interest that went back in our client's pocket versus their lender's pocket. We project to increase their retirement about $3.4 billion more in their retirement than they would have had not sitting down with a YFB representative and showing them how to get out of debt and increase their retirement. Is it worth looking at for you? Well, we've done $8.6 billion in sales through 16 through 23. So when I say to you, and Pinnacle brought this to you guys because, number one, it works, okay? And it's a great way to build a whole life practice. If you don't have a whole life practice now, it's a great way to pull that in and do some whole life business. If you add YFB to your current practice, you're probably going to see an average of increase in production between 30 and 50%. That's kind of what the average has been across the board, and to do our program. If you look at debt and we look at finances, and this is something that I'm very, very passionate about. Our mission is passionate about this, of what we do and how we're trying to help families out there today. But finances is pretty much in the middle of our life. Number one, when finances are out of balance, if you will, it creates problems with our family. I mean, number one, it creates bitterness, anger, divorce. It creates child abuse, spousal abuse, even suicide, even murder. Our point is that if we can help a family get their finances in order, we're going to, number one, have better parents, have better father, have better mother, have better husband, have better wife, have better partners, whatever the case may be. If we can get finances in line and get people on a program to help them get them on really on the road to success, we're going to make a huge difference in their family. The second thing, it causes problem with their fun. Dave Ramsey's program basically says, eat rice and beans, cut up your credit cards, and don't have no fun. Well, that dog don't hurt very long, I promise you. We still got to have fun, but if your finances are out, it creates a situation. Our family vacation goes away, eating out goes away, things of that nature. I have 9 grandkids. They all play sports, and today, if you put a kid in sports, it's very expensive for mom and dad to have them in sports today. So it can cause bitterness even with children and with their parents. It causes problem with their faith. A lot of times people stop going to church, stop giving to church, blame God if they're in a financial situation in regards to that. So at the end of the day, we're trying to, when you look at finances, it's really in the middle of everything we do. And then how about our fitness? We stop going to the gym, or we stop eating, the healthy foods, and we start eating at McDonald's. And of course, that's not even cheap today to eat at McDonald's, but we start gaining weight. That can cause depression. And one of the things I want to share with you, and you may or may not know this, I certainly know this, I've lived with this in my life before, but financial stress is 365, 24/7. It what keeps you up at night. It what wakes you up during the night. It just stays with you. That stress never ever goes away. It causes problems with our friends. Maybe your golfing buddies or hunting buddies or fishing buddies. You can't go because finances in that situation. Or the ladies, the weekend for the ladies, they can't go. Or maybe you're the guy that invites everybody over the house to have steaks or whatever the case may be, and all of a sudden finances get to the point you can't do that. So it causes problem with our family, our fun, our faith, our fitness and friends. And then mostly important, because what we all do in most cases is working with people's financial future. Their retirement is the end goal. And the reason people can't retire today, it's not because they don't have enough money. It's because of the biggest thing that causes all of this, which is debt. Debt falls in the category of keeping people from having a great family life, fun, faith, fitness, friends, and their financial future. The problem in the case today, and in most cases you'll see this, but in most cases we can take a normal family out there and take their liabilities and turn them into assets. Now, here's what I will tell you, and don't get mad at me when I say this, because I am one, right? What is our pitch today? Where's your money? I'm better than the guy you got. Move it over to me, right? I mean, that's what we say. That's how we prove it. We show them either fees or their investments or whatever the case may be. We show them tax situation, whatever. And I understand that. But when you can take someone's assets and turn them into liabilities, that's a whole different ballgame. And I'll tell you what, they look at you totally different today. And that's why we move so much money when we go from the debt side of the fence. But the problem is people couldn't make money off of that. And at the end of the day, when we started Your Family Bank, and we're the guys that started using life insurance to be able to get people out of debt, to give their dollar to jobs versus paying it directly to the lenders, if you will. We're snowballing debt. That's nothing new. I get it. Dave Ramsey's been doing it for years, right? But the difference is we're taking a different step. We're running that money through the policy and the software, and you'll see this in just a second. Really compels that client to make a decision and move forward in regards to that. I was sitting here yesterday with a client that we do a radio show, and some clients came in yesterday, and she's 66. She's a little bit older than that, but they just bought a new house. They got some debt and cars. We're putting $2,000 a month in creating a program for them to get out of debt. So it's a great way to, number one, help people. I mean, it's got to be good for three people. It's got to be good for you, the agent. It's got to be good for the client, and it's got to be good for the insurance company. And so Most clients and prospects are in debt. So how big is our prospect pool? Well, if you look at, people always ask me, well, what's your target market, Larry? What is the age group? Well, from 25 to 35 is student loans in most cases, or people are trying to buy homes and things of that nature. I have a 24-year-old kid down in South Florida that goes to conference every year and does fantastic, just working with people with student loan debts in regards to that. So that arena, 25 to 35, and then you've got 40 to 60, middle income America, which is really our sweet spot, if you will, paying off mortgage, eliminating debt, retirement planning, and college planning. So again, let me take you back to the case we just did today, right? The person I was talking to was in Nebraska. And again, show him how to pay off his debt, but at the same time, move that for over $400,000 over into an 80% going to new. That's middle income America. Those sales are going to happen because of showing people how to get out of debt and giving them a plan to do that. Age 60 to 75, 65% of all people that are retired today, currently, right now, still have mortgage debt and credit card debt that they're carrying into retirement. My point is, what if we could show them how to pay off that debt, pay off that mortgage, pay off that credit card? What does that do for retirement? Well, it increases their cash flow, and so it gives them a position and a point that if you think about that for a second, and by the way, at the end of the day, it's one of those, it's a situation that, especially people that are retired or going to retire. Let's say if you take, I don't know, $2,000 a month, and if you be able to show somebody where you're going to create an additional $2,000 a month, right? I mean, that sounds like a pretty good deal, right? If $2,000 a month. Well, if you free that up, think about this for a second. That's like giving them. I mean, if you think about that, that's like giving them $480,000 in an account at 5% to create that $2,000 a month. That's huge. Now we didn't give them that $480,000, but we gave them the same equivalent of like they had that. So it doesn't matter. It all comes down to, it doesn't matter how much money you have, it's how much money you can spend, right? That's the huge. What is the new buzzword? The first buzzword in the whole world was, hey, how would you like to have tax-free retirement? Zero's your hero, and people still use that today. I get it. But the other side of the fence is that if we look and go, it's not how much money that you have, it's how much income. And we talk about today, we have this new thing today called income specialists, right? Well, what better way to create income is to pay off debt and put that cash flow back in that client's pocket. I ask you yourself, what would it mean to you right now? Think about this for your second. Think about your own personal situation. And think about your wife, your children, whatever the case may be, and think about how much you are going out to your debt service right now. What if in 7 to 8, 9, 10 years, whatever it took, what if that was all paid off? What if it's absolutely, now you're totally debt free? How would that feel? Well, I can tell you, I have $1.4 million of personal debt, 2 companies in debt. I can tell you, without a shadow of doubt, that once that's all paid off, it is an amazing feeling not be able to have debt whatsoever, and every bit of the money comes into me is free and clear. We call that giving people life, live interest-free every day. And that's what we want to try to do for people. We want to show them how they can live interest-free every single day and create financial freedom for them without going to get the second job, without retiring and just living off Social Security. So what do experts have to say about money, debt, and interest? Well, Mark Cuban, which owns the Dallas Mavericks and one of the richest guys around and does really, really good on Shark Tank, he says the best investment you can make is paying off your credit cards, paying off whatever debt you have. If you have a student loan debt at 7% interest and you pay it off, your amount making 7%, that's your immediate return. That's a lot safer than picking stock, type, real estate or whatever it may be. I can tell you, one of the hardest things to get around really agents, if you will, and clients is that if I'm paying 7% and now I'm not paying 7%, I am now making 7%. That's huge. Well, Warren Buffett had a lady come into her and his office and had some money, not a lot of money to him, but a lot of money to her. And his first thing he says, well, do you owe any credit card debt? She said, yeah. I said, well, what's the interest you owe? She said, 18%. He kind of looked at it and said, man, he says, listen, first of all, I can't make you 18%. The best advice I can give you is take that money and pay that credit card off because you're going to make an immediate 18% return. Well, that's not what she wanted to hear, but that's what he told her. And so she then said to him, well, wait a minute, my daughter has some money. Where would you tell her to invest it? He kind of chuckled a little bit and laughed and said, well, I would tell her to loan it to you because apparently you'll pay her 18%, and I can't do 18%. So it's a huge situation when you look at what we're paying in debt today. Well, what makes us different? What's our process? What makes us different? Well, I think we built a whole company on those two questions right there. And I'm just telling you right now, again, 1,000 times we've asked those questions, we pretty much get the same answer. What's our approach? Our approach is we ask the two questions. The first appointment we set, and we go through the 7 steps through the software that you're going to see in just a second. And we come back with a second appointment, which is the big picture report. They're going to fill out a data sheet. We're going to put that information into the software. It's going to calculate exactly, their debts, the interest, and it's going to download the insurance company's illustration into our software to make it very easy for the client to understand. I've always been a yellow page guy, yellow pad. I like drawing pictures. And when we designed this program, I want it to be simple. And today is simple enough, number one, for you to understand it. But number two, most importantly, it's for the client to understand and make that close. So I told you when I first started, our closing ratio wasn't that good. 70 people said no, only 30 people said yes. That closing ratio today for us is 97%. Big difference between now and when we started. But again, you'll see in a minute that it is really a Bentley. I want to give you this case because I think this case is kind of a landmark case, if you will. This was a pastor in Texas, and he went to a CFP and he shared all his information. And the CFP's advice was, number one, quit giving to your church. You may want to think about filing bankruptcy. He did want to retire in 8 years. The pastor did. When I got him and his wife on the phone, I looked at their situation. I said, listen, Pastor, you've got a mountain to climb. There's no doubt, but I know we can help you. I want you to see something for a second, because the CFP said he run the Monte Carlos and run all the Monte Carlo scenarios and come back and said, there's no way that you can retire in 8 years. So that's the report that he got. It's a 42-page report. I have that page. You're looking at his debts as we speak right now. So I want you to look at something now. I want you to understand how interest works. For every dollar that he's paying for interest, 30.36% of that is going to interest. That's his true interest payment, right? His total interest is $373,000. He's going to give away. Not only does he loses that, he'll never get any of that back, and he'll never be able to invest that, right, going forward. So when we look at his real debt was, for 27 years, was $1.2 million was what his real debt is. And here's what I can tell you: when the software calculates this in front of a client, and they see what their real debt, they thought they owed $856,000, which is a lot, but their real debt is $1.2 million. $373,000 of that's interest, and they're going to be in debt based upon how they're paying it 27.2 years. What were we able to do for him? Well, we were able to get him out of debt in 7.3 years versus 27 years. We saved him $198,000 in interest. We freed up $8,900 a month. His potential savings in 30 years will be $4,195, with combined his savings and the death benefit will be $4.5 million. Now, I can tell you when I made this presentation, this was a Zoom presentation that I made. This was an agent in Texas that referred this guy to us. We talked to him. When I got off the phone, the agent said both the husband and wife cried. And I can't tell you really how many people have sit in my office and cried tears of joy when they found out what they could do. This was a single mom, business owner, had 2 kids, 3 and 7, I think, or 3 and 5. Interest $191,000. Basically, she made good money, but she had a lot of debt. I mean, her $588,000 was her real debt. We went from 28 years to 9.8 years. We saved her $90,000 in interest. We freed up $2,640 or $31,000 a year. Her combined savings at 30 years, $1.3 million, with death benefit 1.9, almost $2 million. This particular situation, this is kind of where I'm talking to you about referrals. And I'll tell you from both those cases. From this case, the referral came. She has a business, she's part of the business. She owns part of the business. I'm making a presentation to her employees. Now, she doesn't have a lot, but she has 16 employees, and she wants every one of her employees to get them out of debt. And that absolutely, you'll see the marketing in a few minutes. The pastor that I showed you with the superintendent, that opened up probably, I don't know, 1,500 churches in Texas to do that. And if you, and this is what I'll say, if you're connected with a church, right? If you work in a church or go to a church, we certainly can help you work in that. We do a lot of things with churches, with Church Legacy Ministries. All right, so AAA marketing, anybody, anytime, anywhere. So individuals, families, nonprofits, we do a ton of business with churches, schools. Also, we show businesses how to get out of debt. The average premium on business case is $100,000. The average target premium for individuals, about $4,600 is a target. And then financial education in the workplace is where we go into the HR person and talk to them about showing their employees how to get out of debt. And so that's working. All of those areas work. We're in 6 states in the school districts that we do this work with and show them how to get out of debt. So I'm going to Caleb bring up the software and kind of let you see, kind of go through it real quick with you and give you some insight. It takes a little bit to learn it, and today is really kind of give you an overview, if you will, to get you to maybe come to our training. When I say come to the training, our office is actually in St. Augustine, Florida, at the World Golf Village. That's where our office is. And years ago, before COVID, everybody had to come here to get trained. Now, since COVID, we've all had to learn Zoom and all these other types of deals here as we go through. So you can go on a virtual currently. So Mark and Joyce, this is our kind of the story that we show everybody. Mark and Joyce, there's 2 problems. Number one, what we call lost opportunity cost. This is using every dollar once. So when I first started Your Family Bank and started it, I invited 19 couples into my office, and I just want to show them what I, was thinking about doing. Out of the 19 couples, 17 of them want to set an appointment. I had some of those people say that they pay cash for stuff. They don't charge. And I said, well, you're actually paying interest. And they said, no, you don't understand. I pay cash. Well, no, because what happens is here you save up, and buy whatever you're going to buy. You go back down to zero and do it all over again, right? We're only using that. This money has lost whatever interest it was earning. It lost it when we bought whatever we bought. The second area, and this is about 20% of America right here. This is infinite banking 101 right here, if you will. 80% of America falls here. This is, we charge and we almost get it paid off, we charge again. We almost get it paid off, we charge again. But both never get past the line of zero. So what your family bank is to take them past and give their dollars more than one job and continue to make money. What you don't want to do is stop compounding interest. And so even though we're using money to pay off debt, we are building wealth at the same time, and I'll show you that in just a second. Market Joyce, their current debt, these is just normal people out there, $383,000, but their real debt $634,000, and they were going to be in debt for, I don't know, 26.8 years, and they're going to pay $251,000 of interest. So when you talk to a client, this is what they think they owe, but this is what they really owe. And that's an aha moment for most people. They don't never realize that. So what do we do about it? How do we fix this? Well, we show them, number one, this is what your interest is. And I want you to see something for a second. Look at the interest that they're paying. I mean, we think we're paying, I don't know, 3% on our mortgage. Right now they're 7%. But I mean, look, 18, 6, 22, 19, 0. So we think, well, this is what we're paying. We're not. We're paying almost 40%. Every dollar I'm spending, 40% is going to interest. No wonder we can't get ahead. And by the way, 99.9% of America has no idea this is going on. I promise you, right? So when you show them that, it's an aha moment. But we got to show them. We got to show them how banks work. So how does banks work? Your family bank, right? So we deposit money into the bank. The bank is going to give you an interest rate. Whatever interest rate that they're going to pay you, that's what they're going to pay you, right? But if you go back into the bank and want to borrow that money, what are they going to charge you? Well, they're going to charge you whatever what your credit score is, how long you want the money, what you want the money for, and what collateral you have. But they can charge, 15, 12, 24, 29%. So who is making the profit here? The bank. So the bank strategy is to get you in debt. Our strategy is to get you out of debt. Now, your family bank is not a bank. It's a concept of banking, because here the arbitrage is they're paying you anywhere from 1 to 4 to 5% currently today, and they're making 15, 12, and they could loan that same dollar out 7 times. 7 times. I'm only looking at 4 here, right? But at the end of the day, it's a huge benefit to the bank. So how does this work, Larry? How do you make this work? Well, first of all, we're going to find inefficient dollars. We're going to go in and be able to find the premium. You got to be able to find the premium to create the benefit. Where does premiums come from? Gosh, there's an array of where they come from. Maybe they're paying extra on their credit cards or mortgage now. A lot of people do that. Maybe they have money going into an IRA or 401k. Maybe they have money sitting in savings accounts. Maybe they come up with a figure they can use. But our job and what we teach in all our training is, where do we find the money? So once we find that, we use a specially designed high cash value, early access cash, overfunded whole life insurance. And so once we take the money and put it in there, right? That's our bank, if you will. This is our bank, right? And so once we do that, we create cash value. Job number one is a death benefit. God forbid something happened, it's gonna take care of the family. Different riders on different policies, whatever the case may be, living benefits, critical care stuff, all that type of stuff. That's this side of the fence. We don't buy it for this reason, but that's job number one. We buy it really for the cash benefit. So job number two is paying off debt. We're using that cash value to pay off credit card debt, cars, mortgages, and student loan. Why it takes so long is usually student loan and mortgage, because that's the biggest. We're going to eliminate that debt. So think about this. Dave Ramsey is that he's taking money and sending it to the credit card company. Who has the money? Credit card company, right? Instead of doing that, we're using a policy to hold that money. And so once we do that, what happens then? Once we pay off a debt, whatever interest, whatever we're paying on that debt, we save the interest, number one. And number two, we're going to take whatever we're paying for that credit card, and it goes back into the policy along with the dividends and the guarantees interest that it accrues. So we do the same thing over and over till all their debts paid off, right? So how does the approach stack up? Could they do it themselves? Answer is yes, they could. But if they're using a 401k, is it accessible? Don't know. Is it without penalty? Probably not. Is it guaranteed growth? No. Is it risk-free? No. Is it tax favored? Yes. Can you use it for leverage or death benefit? And the answer is no and no. How about a mutual fund? Is it accessible? Sure. Is there a penalty? Depends. If the market's down 20%, if I take it outside of penalty, I say it is. There's no guaranteed growth, not risk-free, not tax favored, not leverage or death benefit. How about savings? A little better as far as accessibility, take it out without penalty. You could have guaranteed growth. It's risk-free probably in most cases. It's not tax favored. It's not leverage or death benefit. Your family bank, though, using the policy, hits all the boxes: accessible, penalty-free, guaranteed growth, risk-free, tax favored, leverage, and death benefit. That's why we use what we use. So based upon Mark and Joyce, they were going to be in debt for 27.8 years. Your family bank way, they're going to be out in 9.5. We're going to save them $116,000 of interest. Remember, that goes back in their pocket. We freed up a cash flow of $37.56 or $45,000 a year. You're going to have $900,000 in an account to create that situation at 5%. Potential savings in 30 years, $1.6 million. With the death benefit, $1.9 million. Now, there's an easy close right here. Mr. Client, this is where you're at. This is where you can be based upon the same dollars you are spending currently today. What would you like to do? Well, 9.5 versus 26, we're going to interest pay 134 versus 251. In the same exact time frame, they would be in debt. They'll have 1.2 million. So there's my point to say a few minutes ago that when you take liabilities and turn them into assets, in a lot of cases, you're creating over $1 million for retirement, which is the top 2% of America, with a death benefit 1.5 million for the family. So how does this work? The YFB, what we call the debt wave: reduce the debt minimum payment, pay off the first debt, payment goes back in the policy to pay off the next debt, interest evaporates, building the cash benefit, and crushes the biggest debt, uses what we call the tsunami, which is the mortgage in most cases. Well, how does this look? Well, this is probably, when you look at this, and I want you to pay attention to this, because this probably really makes the sale pretty simple for the client. Mr. Client, this is you paying it the way you're doing it right now. This is using your family bank way. All right. So even if they're paying extra, we put that in there if they were. So let's go. I'm going to go. Let's see, 12. Let's go 12 months. 12 months. So remember, this is paying off. This is Dave Ramsey way, if you will, over here, right? We're paying off our debt. So we paid off 2 debts, Visa and orthodontics. Over here, your family bank way, we paid off 1, 2, 3, 4, 5 debts. But here's what I want you to see. How much money do we have earning interest over here? Zero. How much do we have here? Almost $6,000. We're building wealth while we're paying off debt. So let's try 24 months. Let me go back. No. Oh, 25 months, close enough. Look, we paid off 1, 2, 3, 4, 5 on this side. We paid off everything but the mortgage. Usually in 24 months, we pay off pretty much all consumer debt. The only thing we got left is mortgage. But don't you see something? They still owe the mortgage $10,000 here and $4,100 here. We owe nothing but the mortgage, but we got almost $16,000 earning interest in an account. They got nothing over here. And if we go all the way to paying off to the end, if you will, and let's go to the end of this thing. Well, I can make it go a little faster. So we're at, well, why does it keep doing that? I'm sorry, my fault. Perfect, thanks. So look, they paid off all their bills on the left side. They got nothing earning interest. We paid off their bill on the right side. And they got $1.2 million. Mr. Client, you can keep doing it the way you're doing it. You can do it your family bank way. Which way you'd like to do it? Well, it really, I mean, if you come down to it, I don't like using this word, but it really is a no-brainer. Because why the heck would I want to have almost $1.2 million? Now, wait a minute. Because I know this goes through your head. Well, wait a minute, Larry. They're not just going to pay off their debt and never buy anything else. And you are right, they're not. But do you think they can buy other stuff, cars or whatever, at 1.2 million? And the answer is yes. So not only do we get them out of debt, we give them a way to be able to start buying other things without going into debt. And that's huge. I mean, that's why 90% of the people fall off Dave Ramsey's program. They go back to the same way that they were doing it before in regards to that. So at the end of the day, what we're able to do is that we started this policy by $755 a month. Now, these people are making about $70,000 a year, $75,000 a year, husband and wife both working. And you can go through and see what the cash value is anywhere along the line here. And if they died tomorrow, day one, they got $185,000 of death benefit to pay off everything that they had at that point. So what are the benefits? Number one, establish emergency fund, liquidity use, control of the money, access cash value without penalty, tax favored growth and distribution, flexible premium, self-finance their future purchases, improve their cash flow, earn interest while paying off debt, no loss of principal, safe from market fluctuations, and self-completing in regards to that. So that's kind of how we do a whole training on that. I'm not going to do that today. But at the end of the day, that kind of shows you if you look at, that's the insurance ledger over here. And what I want to show you, put $9,000 in, you got cash value of $5,445 first year. Debt benefit 0.85, right? Next year you put in 9,000, you got 11,000. We're paying off debt over here, and this is your reserves. This column right here, which is the E&E, emergency and emotional spending, we never use that for paying off debt. That's the emergency fund that we build for the client, that they have that. Ladies and gentlemen, I'm telling you why. There's a lot of different things out there in retirement planning and all of that, and I get it. But I don't know of anything that speaks more to a client than showing them a way to get out of debt and build wealth at the same time and create a tax-free retirement, doing the marketing, the software, brings in new clients, and writes contracts. That's what we do. So what's the income potential for you? This is based on an average case, and in regard to that, if you create one sale a month, our top agent does between 40 to 50 cases a month. But if you find one case per month, you're looking around 40 grand, which is not a lot. I get that. But that's added to what you're already doing. If you do 2 plans a month, you can do 80,000. We did 14 last week, right? 3 plans, 120,000. That's respectable. You took a business case, you're looking at $150,000 a year, one case per year. So my point to you is that it really depends on you, but it's a great way to talk to people. It's a great way to open doors for people. It's a great way to have a conversation. That these are people that if you have a book of business, you can go back to that book of business and even talk to them currently today, right? So what's your next step? Well, the next step is you got to come to a training, a YFB boot camp. Now, when I say come, you can come live here. We'd love to have you here, but you can come on virtually. So it's a 2-day event, and I'm telling you, it is a life-changing event. We're going to go through the 7-step process. We're going to go through this with Mark and Joyce. There's going to be sales, marketing, how to get referrals, the software training. All of that is going to be there. The cost of that is normally $250, but because you're with Pinnacle, there's a 20% discount on that. And here's what I will tell you about that. If you come to the boot camp and you spend the 2 days with us, either live or virtual, and you feel at the end of those 2 days that it wasn't worth, you didn't get anything out of it, it wasn't worth your time, I will refund whatever that amount is back to you. Now, before you get excited about that, I've made that promise for years. I've never had to write that check because I know what you're going to get in that 2 days. There's a lot of sales training in that, whether you do your family bank or not. I guarantee you're going to come out in that 2 days with a lot of great ideas. I'll give you a close. I promise you this. I'll give you a close that has made me seriously millions and millions and millions of dollars. All right. So you got to come to the boot camp. When is it? Well, May 15th and 16th is the next one, which is virtual. It's from 10 o'clock to about 3:30 or 4, both days. I think that's a Wednesday and Thursday. You can shoot that code right there, or you can visit YFB Opportunity to get more information in regards to that. But you have to come and you have to use this code PFS24 to get that 20% discount in regards to that. So take a picture of that if you need to and shoot that. Second of all, you can reach out to Pinnacle for contracting with the YFB carriers. That's something that you have to do that. And of course, you have to review and sign a required non-disclosure amendment with us, with YFB. We will, and we'll email that to you from our office for that. Joining YFB, is there a cost? And the answer is yes, there is. But the great thing is, because you're with PFS again, it's normally $189, it's $149. It's usually a $500 setup fee. It's $300 for you. The setup fee in the annual prescription is for 12 months. So we will actually, you can pay it in full and get a discount, or if you do it on the monthly basis, we will do it on a monthly basis, but we will not charge you any interest. So that's the good news about that. It is required for you to be with us 12 months. Now, anytime I invest money, I want to make sure I get my money back, right? You agree with that? Sure. YFB, we're going to help you right out of the gate. We're going to help you sell your first 3 cases. Average case, remember, base premium is $4,600 across the company. With one sale, you've already made your money back with one sale. You got to just make one. And that one sale, guess what? Could be on yourself. They will even advance you. The companies will advance you. MTL will advance you if you're doing a YFB case on yourself. You can also get up to $1,500 educational reimbursement from MTL, because doing your family bank by doing production in regards to that. So we make no excuses really for our price point, because we think it's very, very fair. So what is the goal? Number one, membership begins day one. After you get on the membership, it's not one of these deals that here's your box, go get them, Tiger. No, day one is the 2 days, 2 days you're going to spend with us. After that, there's 3 hours of software training that you have to go through. And then from that day, every other week, every Tuesday at 1 o'clock, We have an all-call that you're invited to. You have access to all the sales literature, all the marketing programs. We have 3 different presentations, one for businesses, one for individuals, and if you work in the church market, one for churches that work in that arena. Our first month, we want to help you get your first 3 sales under your belt. So number 1, you see how it works. Number 2, you make money. And number 3, you're helping 3 people. Year 1 gold is conference qualified. This year, we're going with Mutual Trust. We're going to London, and it's a 5-star resort. All expenses paid for you and your partner to go. We just got back from Dominican Republic a couple of weeks ago. Next year is London. You can qualify that. Matter of fact, the great thing about them is that your first 4 months, you get double credits to get qualified. So absolutely, and your qualification is low if you're brand new. So get your license in. So what makes us stand out? I think our selling system is not just software. Our training, case design, we're going to keep it simple. We're still in the field. We're going to help you sell. If you want us to, help you sell a case or whatever the case may be, work with a client, we'll be glad to do that. Effective use of software, and we give, I think, number 1, we give people hope, and that's the great part about Your Family Bank. Live in interest-free every day, break the chain. So I'm going to turn it over to, okay, go back to that if you want to. I'm going to turn it back over and see if we got any questions that you guys may have. And maybe you typed them in and we can't see that, but maybe they can on the other side, and see if we can answer any questions.
Yeah, we can. We got a few questions, so I can go through them. We actually had a lot of comments as far as this is tremendous, and how exciting it is to be able to help people get out of debt. So thank you for that. One of the first questions looks like we have is what's the commission for the whole life product? I would just say it's 100% of the first year premium. So pretty basic in that way for the whole life, 100% of first year premium. Somebody asked, is there support from the Pinnacle side as well? Yeah, so what I would say is, if you're interested, I can give you all the information for Your Family Bank, so you can reach out and get set up. You can contact me. My contact information on the website there. You reach out to me, my extension 7105, or you can email me directly at gregyotis@pfsinsurance.com, and we can help get you started. Another question, couldn't see the code at the bottom. Please provide. I believe that promo code was PFS24. Is that correct, Larry?
That's correct, PFS24.
Just want to, again, Larry, thank you so much for that. That was a lot of really good information. I think really excited about having agents going out there and really being able to change people's lives. Now you see why people are crying in the office when you see them, what you could do for them. So, thank you again. Any questions, please reach out. If that's it, we're going to wrap things up. So thank you, everyone.
Thanks, Greg. Appreciate it. Thanks, guys.
Don't forget to subscribe to catch the latest news in insurance and agent training. See you in the next video.